Good morning, everybody, and welcome to this, the Embedded Lending Revolution, proudly brought to you by TurnKey Lender. Thank you very much for being with us today. Today is a day filled with absolutely fantastic content. My name is Justice Simon. I will be your host today, and I'm, of course, joined by our co-founder and CEO, Dmitry Voronenko. I always struggle with this pronunciation. And then, of course, we'll be supported by Alicia Gonzalez at the end of this presentation within a video case study. Now, embedded lending is currently a hot topic all the world around because it offers such a big opportunity within the world of lending, as well as to close funding gaps in emerging markets. And today we're going to be talking all about what are the opportunities within the embedded lending sphere, as well as why it's such a big deal and for us to all take notice. So with that said, I'm going to be handing over to Dmitry, and we're going to be sharing some great content. Please feel free to ask questions in the questions bar of GoToWebinar, or join me in the chat whilst Dmitry is busy discussing this with you, and we can always ask the questions after the fact. But thank you very much once again for joining us. I'm going to be handing over to Dmitry right now. There we go, Dmitry, you are live.
Yeah, wonderful. Hello, ladies and gentlemen. Very glad to present today and to share with you our company experience with embedded lending, with our clients, with the industry. What we are seeing is happening over the previous several years, and especially accelerated after COVID. And we're going to talk today about this embedded lending revolution and how we experience it from our side, and the most importantly, how our customers experience it, and what will be the effects to the financial industry, to all the other industries across the world. So first and foremost, we totally need to recognize right now, anybody in any industry needs to recognize right now that this is a very huge shift. It's a huge wave, huge paradigm shift in the total economy. Because of this, embedded lending becomes possible, and not only possible, it's becoming more and more available to, I would say, even ordinary businesses, not to mention big fintechs or big companies. And this changing the whole economy of financing. And of course, as a result, the whole economies across the world. So the main consequence of availability of embedded lending platform and availability of embedded lending business model is that now, I would not say yet any small business, but any mid-size and big business can start offering independent financing, in many cases independent from banks, in many cases without the need to have on-balance sheet capital. And it's much closer to the customers, it's much easier to the customers, it's very seamless for clients, and what is very important, it's very fast and automated. So in a nutshell, this becomes possible because of, so to speak, autopilot capabilities for embedded lending. And as you can see on the screen, some analysts even predicted to be up to 3 trillion in 10 years. That gives us totally new market of a size, for example, all SME loans, at least all SME loans in the United States, or comparable market of with corporate loans, with vehicle loans. So it's totally new market, and of course it will grow further. So next slide, please. So the idea here is that the availability of embedded lending for large corporations especially, and then down the stream to all the mid-sized corporations regionally, locally, and in every industry and sub-industry will open market that will be times bigger. So the comparison here on the slide, you can see that, for example, the whole fintech lending market was around 20 billion. It was a couple of years ago. And it will be 10 times bigger with embedded lending available. So everybody is speaking right now about Apple that offers this pay later, and now already a couple of days after this, PayPal also offering the same opportunity, and this gives all the players in fintech space and in finance space the very big sign that nobody can ignore anymore, that this is a big thing to come, and this big thing that will have consequences, and I will explain how and why. Next slide, please. So what we had a situation, and for example, in 2010, 2012, first companies started to offer embedded lending. It was first buy now, pay later companies like Affirm, or it was companies, they did it in very unique niche things that started in very niche sectors that started it doing for their own sub-segments. And now, this year, and a couple of years before, you see more and more digital companies starting offering this, namely payment processing providers or software providers like Shopify, for example, or QuickBooks, or like Stripe. You see they offer also capital opportunities for their customers. And what we see will happen that in 10 years to come, all the companies, or at least all the mid-sized companies, will be able to do. And this will be available because of platforms, mainly because of platforms becoming available and easy to use. So before to start lending, you need to be dedicated to this business, to be a lending company or a bank, to build a team, to have pretty significant investments in software, in market research. Right now, when these companies will be doing it for their own customers, it will be much easier for them to do, and I will explain why. So next slide, please. So that is because context will dominate financial products. So before, to get a loan or to get capital, people went to a bank or to a finance company, leasing company. Right now, because of availability of buy now, pay later, and availability of embedded lending from big players like Shopify or like Apple, PayPal, customers already know that it is possible to have this financial product exactly at the point of need, exactly at the time of need, and exactly in a couple of clicks away. So they will demand more and more of that. And as you know from your own experience, I'm sure the customers value a lot the convenience, and sometimes they will go for much more expensive offer if it's convenient, if it's easy, if it's fast, if it's understandable, and if it's exactly at the right time of making the decision. And this is what brands are doing. They embedded lending exactly within their clients' journeys, and this results in higher revenues in all, actually, not only in higher conversion rates, but in higher ticket sizes and even more, which we will cover in the next slide. Next slide, please. Okay, so here, as you can see, a company, for an example of Shopify, a company that actually wants to automate e-commerce, and now automating e-commerce and probably even using already Shopify for quite a time requires capital. So Shopify knows a lot about this company. They can know their inventories, speed of purchase, and how they sell, and what the seasonality, and how it compares to similar vendors. So actually knows a lot, much more than bank can know. And this gives another edge to this company. So think about payment processing providers like Stripe, for example, or any e-wallet. They have much more information about this client than many banks can have, and very often much more and more detailed. Very often they have mobile apps installed, so they can have at least some additional information like model of this smartphone, or if this person actually does something at night with this platform, with Shopify or something. And they can use this behavioral data in order to judge about credit capabilities and worthiness of customers much better than a bank. So they are much more ready to give loans to the groups of customers which will be otherwise avoided by banks or, so to speak, classic finance companies or even fintechs from the first wave. Next slide, please. And on this slide, you can see real-life examples and from our clients. So let's start with the first one that was not that obvious, even for us from the very beginning. So imagine totally specific industry like plastic surgery, and it can be any surgery that has relatively high cost. And in this particular case, this business pays rent, pays salaries to their personnel, pays maintenance of medical equipment every month. These are fixed costs. And they may have seasonality like plastic surgery clinic, or they may have like lower demand because services are expensive. And then offering financing on their own means they will increase revenue significantly, and 80 or 90% of this revenue will be towards net profit, because everything else, or close to everything else, it's fixed cost every month, no matter what. And they have this capability actually to offer customers what many of our clients name in-house buy now, pay later. So they tell customer, okay, pay me 25% in advance, and then, as usual, buy now, pay later, 25% every next month. While for them, it will not be considered as loan, it will be considered as deferred payment. And for them, we have totally different unit economics. So we have totally different profitability economics, because for guys like this, even 25% prepayment is already profit. And they already actually made up everything they will spend. And for them, they do not go for interest rate. They're going for increased revenue. Like in this particular case, it's increase in average order value. Yeah, it's removal of seasonality. And this, we have one case when it's tremendous. Revenue increased twice. They did nothing else. They just started offering this financing, very understandable financing. And as you can understand, customers will value this relationship, and they will try to pay in time. And especially if customer expects some other procedures down the road or down their life, so they will be very eager to pay and repay. Another case is with multinational manufacturer, many countries, many factories, and they just added it on top of the e-commerce website. So they added capability to do financing. Again, for their customers, it looks like you can pay right now and I will give you 5% discount, or we will finance it for you for 0 interest rate over 3 to 6 months. And they just see that this was very pure experiment, so they did nothing else. They just offered one more button, and they actually saw 44% increase in conversion rate, so number of people who visited them. So this is particularly important, of course, for premium goods manufacturer that has relatively good margin. But let me also discuss the next case, the situations when businesses have the opposite business model, when they have relatively low margin. So right now, when they partner with buy now, pay later providers, they pay a certain amount of money to them. And if their margins are low, like imagine if margin is 10%, yeah, giving away 5% to buy now, pay later provider means half of net profits for them. Imagine margins that are even lower, so they cannot use it unless they can add it as their own offering. And this is possible only if they have platform that is, and this is very important, the platform that can do majority of things automatically, because they don't want to build bank inside the organization. They don't want to create a new business inside the organization. They wanted something like embedded payments, so something that is easy, and solutions that offer this for them actually solves the problem. They can do it on their own. So next slide, please. So what this means also for banks and lenders. So this possibility of embed lending on top of their own offering actually allows these corporations, these businesses, to disintermediate banks, and in many cases buy now, pay later provider. So in some cases they just simply can do the same on their own, but in many more cases they open new markets. So this, like I told, situations with a low marginal situation, or very narrow focus situation. Since they landed to their or finance their own customers, they open this particularly new market, sub-market, sub-segments that is unavailable for financing in any other case. Also, please take into consideration the fact that very often we have huge manufacturers of different equipment. And for them, even in the first case scenario, to repossess equipment, refurbish it, and to sell again is much, much easier than for a bank to repossess collateral. Another strong point of them is they own relationship for so long, and in many cases, this customer as a business already has multiple equipment pieces installed and served and maintained by this manufacturer. So for them to stop paying for this manufacturer for this financing means the whole business can stop because they have 10, 20, 100 pieces of this equipment already installed and maintained. So again, they have much more incentive to pay to this particular company instead of, for example, if there is a chance, to pay for a bank, or they would rather miss a payment for a classic loan, but will still keep paying to this particular provider of finance. And all of this creates actually new markets. So I can give you another very, very tremendous example. When there is a loan to franchisees, and as you can understand, the headquarter knows everything about the franchisees. Even like by location, they can predict perfectly their revenue. And they can do it again much easier, and even without interest rates, because in exchange they earn in franchise fees. So again, it's totally different economics, totally different opportunities, and that is because of focus on the particular niche, in this case on the franchises. Next slide, please. So what I want to emphasize also, so not only embedded lending enables businesses to do better business, to get bigger revenue, but it also enables many things that were not possible before. So we have tens of organizations that use our system for situations where it was impossible. So these are, for example, Habitat for Humanity. This is an international company across many, many, many countries. And what they do, they actually use local communities in order that people from local communities will build houses for relatively poor families in these communities. It's relatively small houses, relatively easy to build, but still there is no mortgages, nothing. So this is when communities actually build it, they finance it, but they finance it interest-free. So, and this actually gives for them owning the system like this that automatically calculates for them all the repayment schedules and everything related to lending, because before it was quite cumbersome and they were limited in their operations. Right now they can do it much faster because it's automated, can be easily replicated to new countries. And this enables them actually to do more, because on the umbrella of Habitat for Humanity they can attract additional capital specifically focused for this, and this makes a total difference of them partnering with bank, for example. And another case is NAMA Foundation that provide support for development and education. So, and this is again win-win situation for everybody. When people get a loan with a delayed repayment, they use this loan in order to get certain skills, to get certain education, then they find a job, they start getting more salaries, and they get actually a fraction of this increased salary they are getting. So everybody actually wins local educational community, winning these people who got this education or got higher salaries, and wins this organization who can then in exchange use this money to offer more things like this. And this is possible because many such organizations are operating on a smaller scale. And for them, having this automated system means they can do it much, much easier. We have a couple of other cases when there is a regional government and institutions who finance sustainability improvements of homes. And again, before this, and they use this community money, regional money to do it, with embedded lending on top of what they offering, and they offer these services of renovation and sustainability. They can do much more. Next slide, please. Okay, that's the one. Then please, a couple of slides back. I want still to discuss the topic about the difference between buy now, pay later providers and, so to speak, in-house buy now, pay later. Because I think this is the question everybody asks us. And another question I wanted to discuss, what banks and classic finance companies can do with this paradigm shift. So the first, I will start probably with the last question. So what we see very good partnerships. So many companies, they still do not realize that embedded lending is so easy that they can start doing. So they still think this is very complex process. They need capital, they need knowledge, and in this particular case, bank can come in and say, let's do it together. In other cases, when they are afraid to do it on their own balance sheet, banks can come in and offer capital, because banks can also understand that there is almost zero risk for the cases, again, like these medical equipment manufacturers, or for the case of like franchisees, or very, very manageable risk. And if a bank lends not to these end customers, but to particular company that then will lend to franchisees about whom they knew everything or almost everything, yeah, or at least partner with this company. Banks or finance companies can earn a lot with such partnership, because what is actually going on, more and more businesses understand that they do not need capital for many cases. So think about any service provider. So we discussed a case with a healthcare manufacturer, with healthcare provider, but we have tax advisory services provider, accounting services provider. We have the case with airline that understands that air flight is half full and there is only 1 week left, no way they will fill it in. So for them, again, pay me 30% now and 2 other payments in 2 months, it's already a great bargain. And understanding these cases, these companies, they start understanding they don't need capital. So they have already this flight, they have already these surgeons or clinic, they have already these tax advisory consultants who in any case will be receiving salaries, and they in any case will incur these expenses. So they just give this financing to additional customers. And in this particularly great case as with air flight, so if half of the air flight is full, then it's clear that financing that will bring certain customers additionally, and this by the way can be only very old known customers. It's not everybody from the street. It can be offered to somebody who is already flying with this airline for many years. So this gives them this knowledge that, okay, I don't need capital at all, then, and I can offer it again, it's pay me in installments, so I will give you free invoices. So they don't even need license in many cases. Yeah? In many cases, they sell infrastructure like telecoms, and that's again, they don't need capital. In also many cases can be very short-term loan, like 20 days or 30 days, and in these cases, they start understanding they don't need to send their clients to a bank or to a buy now, pay later provider. And the more and more brands will understand it, the less and less available customers will be ready to go to banks. Again, mainly because this financing is offered exactly at the point of decision and exactly at the time of decision, and very often with a much more seamless way to do it. Yeah, even imagine that if you, as a brand, already knows your customer for quite long, has this customer information, even much easier to fill in application form. And all this together gives this totally different opportunities and threats to banks. Although I don't think that some analysts think that banks will lose a significant amount of market share. I don't believe in this, so probably will lose some parts of it, but mainly it's about new market. It's about these things that were mainly unavailable in any way, but still there is a threat. So it's not like shrinkage of the market share of 50%, but it can be up to 10% lost. And especially, of course, when guys like Apple or PayPal entering in, but this is other kind of threat. It's not only about embedded lending. It's much more about something else, but also a little bit about embedded lending. And then the last question, I'm sure many of you want to discuss, is how it's different when a brand, as in our case, this manufacturer of premium goods, did it with our software instead of going with buy now, pay later provider. Why they will be doing it? And there are 4 main reasons. Some of them we discussed. So first, they have some unique data. Buy now, pay later provider or a bank, they will be using classic credit scoring or generic credit scoring or credit bureau scoring, so they will treat customers universally. While then they can have a lot more information and judge about this customer much better, both about good and bad customers. So second, this is when they don't want their customers to be stolen by competitors. And this goes only about buy now, pay later providers, because on their website they show logo and links of competitors. And especially big brands. So for small brands it's okay. It's even advertised by BNPL providers like, we will bring you more clients. And for smaller brands it's okay, more clients can be gotten. But for bigger brands, this, and especially for premium goods, where customer acquisition costs are high, this means, okay, we will lose some customers. Some of our clients calculated in one case it was around 5% lost. In another case was up to 10% lost. Their prediction how much they are losing out of this. So buy now, pay later provider brings them in 20 to 40% higher revenue, but at the same time they are losing, for example, 5 to 10% of their customers to their competitors. Then the third reason is they want the customer loyalty. They want customer to think this is them who are doing it for them. So like again, think Apple. So brands who are building ecosystems, who want to be ingrained with customer life, they want customer to be thankful to them. And many of them, and we see many customers who initially use buy now, pay later providers, then they saw like, oh, I see close to zero bad debt rates. I see that I'm giving away thousands of my clients to BNPL provider for zero customer acquisition cost. I see that actually it's automated. And if I have automation, I can do it. Yeah, it's more complex than payments, but why not? I can do it. And then own the customer loyalty. And not only that, with 2 choices, having a button like pay later by Apple and pay later by a firm, you can of course guess how many more people will choose pay later by Apple. Yeah? So Apple will have higher conversion rate here just because this is the brand clients actually want to buy. Yeah? And this particular brand actually offers financing for them. So even conversion rate by mere fact that this is offered by the same brand, conversion rates will be higher, and in some of our estimations it's up to 10 or even 12% higher just because of its pay later by the brand, not pay later by any third-party provider. And then another reason we discussed is because of sometimes tight margins. And that's it. These are the reasons they actually be considering while selecting whether to go as old times or classic times just to send clients to banks or partner with a bank or do co-branding with credit card. Then another choice is to go with buy now, pay later, and another choice is to go with embedded solution. And of course, some businesses will still gladly prefer doing it with banks or credit cards or co-branded. And some businesses, and especially e-commerce, who needs money right now, who don't want to wait, especially who has relatively good margins, they will go with buy now, pay later providers. But as you can see, in many industries, there are plenty of cases when brands will start doing it themselves. And that is why this is revolution. And that is why we wanted to share with you that it needs to be addressed one way or another. And if you are thinking about it, TurnKey Lender is here to help. And your additional questions are welcome.
So Dmitry, yeah, we got some additional questions, and thank you very much for that. I do think that it is really interesting what you said, because after listening to quite a few webinars and going to quite a few events in Africa, a lot of the mobile providers actually now provide loans, mobile service networks. They actually now provide loans as well, and they utilize the data that they have on their users. So this person has bought an iPhone and he's paying X amount of South African rands a month for it. They actually base the loan amount off of what phone they have, etc. So it's very much a case of they're using that additional data to determine what a person can lend, which is absolutely amazing. But we've got some questions here, and one of the questions is effectively, what is the lowest hanging fruit? So if you're an SME, so if you're a medium to larger enterprise, somebody that has the capital to actually provide embedded lending, what is the low hanging fruit for you? How would you gain the most benefit in the shortest period of time from embedded lending?
So first, low-hanging fruit is when you already have e-commerce website or a kind of app or something, so you already digitized to a certain extent. Then it will be easier for you because for your clients it will be just another button and somewhere borrower portal. Not always needed even, but first you need to be digitized, otherwise it's not low-hanging fruit. Then, of course, you need to have situation when you know your customers somehow. So if you do not gather any information about them, at least how many years they are with you, at least about somehow being able to judge about their credit worthiness for at least the next 3 months, then it again will be not low-hanging fruit for you. Again, can be done. We have scoring, other providers have scoring. There are approaches. We can start conservative, but low-hanging fruit means like again, this in franchise's case, they know by mere location and square feet size. Yeah, and another case like plastic surgery clinic, I can tell you just by nature of this clinic, they come for inspection in several months. It's just the nature of it, the mere nature of the business. So you know, or like we have cases with businesses selling fertilizers to farmers, and of course they understand farmers will need it more and more, and especially if they finance it. And again, by amount of fertilizer, they can understand how much coffee will be, what will be the yield. Yeah, just by this one fact, it's very good prediction. So if you have, if you have such very low-hanging fruits like this, or a very strong customer base. So if your brand is strong for certain niche, or you have protected customer base because of regional, whatever other logistical, other limitations for your competitors, then there is a low-hanging fruit for you. So then you can also understand that you need infrastructure as a business. So why it's going easier in States, even here in Singapore, easier than, for example, in Malaysia, because they have everything working like a charm. Like for example, credit bureau, if you even as a business need a credit bureau, you just enter your credentials, our software is working. Here, for example, in some countries will not be telling which ones, but in some countries you need to spend 2 weeks just to get IP address, just to test. Yeah? In some cases, you need to have access to e-wallets. In some countries in Southeast Asia, it's not that easy. It's a couple of countries left. Everybody else has it. But you need to have e-wallets, so your repayments and disbursements should be seamless for you. So you will not think like, oh, how I will disburse money, what I will do. You will just tell TurnKey Lender, okay, I like Big Pay, for example, in Malaysia. Oh, I like it. It's very known, digital bank, mobile wallet. I will be using it, doing it via Big Pay. So for you, if you select a vendor like TurnKey Lender, anybody else who can do it, I don't know a lot of companies who can, but still check which infrastructure, so to speak, infrastructure providers, which payment processing providers they integrated with. Then, so for you, it will be merely configuration, not actually making new integration with somebody on your market. Then it's a low-hanging fruit. Speaking about this, I'm not telling it's not possible. So we are having customers in many countries, including small ones like Fiji, and we are doing it perfectly there and relatively fast. But if it's low-hanging fruit, because we have businesses who subscribe today and they started lending tomorrow, so it's marvelous. So yeah. Nobody would believe it 3 years ago. Like a company that now was a lender will go and tomorrow they will start financing because everything is automated. So still, please consider infrastructure should be there, so you can integrate and software is integrated or pre-integrated. You can configure and go, or at least spend only a week, 2, 3 to polish this integration and then go.
I think low-hanging fruit is a very subjective term based upon where they are and what they have in place. So definitely, I think the learnings from this is that low-hanging fruit is to ensure that that your infrastructure is there to support utilizing the data you have in order to do lending in that way. Just one final question, and I'm just kind of aware of time, but one final question is, we had a question about how can I use is it possible to use a hybrid approach for embedded lending, where if you only have a certain amount of money that you can lend out as a business, and you want to lend those out to very high value clients that you know will repay, that have good credit records, but then you want to effectively lend or hand over the rest of the clients who have not such high credit records to a finance provider. Is that something that you would recommend? Is that something that's being done currently?
Yeah, I will, and it's done in many cases. So it's done in two cases. In automated case, so to proactive case, you actually pre-select these customers and you send them email. So it's not available on your website, for example, or anywhere you advertise. It's pre-selected case, you tell them thank you for your business and you are a long-term customer with us, and there is a special program to extend it for you only. If you will wish to do some business with us. Another approach is even on the website, when people recognize that what is this customer, and then on the website showing this button. So showing this button to some customers but not showing to others, also explaining that you as a long-term customers, or you want so many loyalty points or whatever. So, but you will need some extra step, because I can understand, of course, you cannot advertise on website or even in your business materials that you are doing for everybody.
This is something that happens in the background. Yeah. Yeah. Okay. Okay. So it's possible. It's something that you would recommend doing, because at the end of the day.
Sorry for interrupting. Even some businesses would do something like this. You need to earn it, do more business with us, or stay with us. It's like a loyalty. They even tell them, like, if you will be with us, like, I don't know, for 1 year, all repayments are good, or whatever it is in your business, and then, okay, you will reach this whatever golden status or silver status, and you will have that. And then you can also regulate.
It works well.
Yeah. And you regulate with the amount of loan. You can say, okay, and I can finance up to $500. And then, okay, you are gold one. I will finance. And this is like wow for a client. Instead of being, they do not offer it to everybody. It will look very fair to everybody. Even if you advertise it on your website, and then you, of course, you can explain, yeah, I'm not offering this to you. Yeah, let's do some more business together, and I will be glad.
Fantastic. That's brilliant. Thank you very much, Dmitry. So thank you very much for that. Should everybody, I know that we had some technical problems during Dmitry's presentation where the slides didn't carry on. Don't worry, we will send you a PDF copy of his presentation after the fact as well. So you will have a copy of that presentation sent through to you. Now is the time, though, that we're quickly going to go to a video testimonial with Own It for Less. So I thank you again very much for joining us. I will most probably be saying goodbye to you at the end of this, but yeah, let's swap over. Thank you very much, Dmitry.
Yeah, thank you.
Thank you for joining us today. If to begin, you can introduce yourself and your business to our audience.
Hi, how are you, Elizabeth? My name is Eliezer Gonzalez. I'm the general manager of Own It for Less. And we do rent-to-own leasing for furniture stores in South Florida, here in the United States.
Wonderful, and a lovely part of our world. And can you speak on why you offer embedded lending in your business? Why do you lend? What are the pros and cons and expectations for the future in terms of what consumers are demanding these days?
Yeah, we offer this type of alternative for customers that have a challenged credit or they have a new credit records, because here in the U.S. it is like for financing option, it is like a principal part of the consumer that has a good record. So we offer, for people that has challenged record. So nearly third of the population of the United States has they're like in the subprime market. They have challenged credit or new credit. So we have a big portion of the South Florida population that can take advantage of this type of financing options. Okay, we also offer like a personalized service to all the customers and applications. So we have a better understanding of this current portion of the market that we are concentrated. Okay, one of the pros that we find in this type of, let's say, a lending model is that customers have access to this type of financing with a minimum down payment that is, is a very advantage way to get the financing. It is a short-term financing with a quick turnover. Okay, the risk model can be adjusted so you can, varies the risk model depending on the situation that you're in or the country situation. Even though we do not check credit score, okay, for customer or for underwriting purposes, we do report to the credit bureaus and we gather a lot of demographic with the customers' insights and applications. Okay, subprime consumer base is a huge market here in the U.S. And, we made it accessible to the subprime market that is, as I mentioned before, almost a third of the population here. So it's a big market. One of the cons that we find is that the risk involved in the operation, it has let's say, quick changes in the consumer behavior, okay, or stability. So that might be a con. So we do offer by law the same as cash promotion. So consumer has like a short period of time to pay the same as cash option, and that is accounts because if too many, let's say, of the consumers that you lend pay in the same as cash promotion, the profitability of the operation will be affected. Okay, the model fluctuates depending on the current economic situation of the country. And as I mentioned before, if you have a same as cash promotion that, a lot of customers pay within that promotion, the rentability of the operation will be affected. Okay.
Huge demographic that you're working with and offering these services to. That's amazing. If you can speak on how the TurnKey Lender platform has worked to help your business to offer this embedded type of lending.
Yeah, it was great when we make the decision to go with TurnKey. We base our decision because they offer integrations and customizations to fit our current lending model. So we were able to, let's say, integrate all the databases and everything that the software that we use into just one platform. So, let's say we can save time, in our risk modeling, in the underwriting process, the customer contact and all the, let's say, reports and reporting side. So it was very beneficial for us.
Thank you. Can you share any further statistics on the effectiveness of the solution? For example, the number of applications you can process. You spoke a little bit just now on the time saved. Anything else to touch upon there?
Yeah, and we have a very particular lending model, and we do analyze all the applications that we receive, even though it is a lot of work because, we use a lot of softwares to gather all this information. The system has helped us to do it in a very efficient way and has all the information in just one software. As an example, we can process 400, 500 applications, and it is very easy because we have, as I said before, all the information in just one platform. So that was good.
What's the time frame that you usually process? You can process 400 or 500 applications?
And, we have, let's say, within the lending space, we have a small operation because right now we're just working with one furniture store. So we do that in, let's say, in 2 weeks, 3 weeks operation. So
It's helpful for our audience to understand if they haven't been familiar with embedded lending and they're perhaps thinking of starting it. Is there anything else that you'd like to share that you think might be helpful?
It is a great software with a great potential and can be adapted to different lending models and very easy to use and intuitive. So I think that's good. And since we started, we were in our mind was to grow the business and to go to different, furniture stores to offer our services. So that was the main point of the, let's say, acquisition that we made.
Well, thank you. I think this has been fabulous. Is there anything else that you want to share about your business or any other promotion or anything that would be helpful?
We always like to share, any of the experience that we have and to encourage the people to help, all the consumers and all the industry to grow. So I think that's very good. If we help each other, we can grow and we can do things better.
Amazing. Thank you very much, everybody, for joining us today on this webinar, The Embedded Lending Revolution. Should you have any questions, please feel free to drop us an email on marketing@turnkey-lender.com, or we'll most probably be passing your details to some of our outreach teams as well. So please feel free to ask them any questions that you might have. With regards to demos of the platform and seeing the platform in itself, we've gotten some questions about that. Please feel free to reach out to our sales team, or I will most probably let our sales team reach out to you should you need to see a demo of the platform or should you want to see a demo of the platform. Just a gentle reminder that there will be a recording available of this webinar in about 24 hours time. We will be sharing that on social media. You will also most probably be getting an email with that in it. And then on the handouts section of this webinar, I just uploaded the PDF to Dmitro's presentation as well, and that will also be sent to you after the fact. Once again, I thank you very much for your time today, and I hope you have a lovely day. Thanks. Bye-bye.